Welcome back. Last week, we talked about Visa stock, ticker symbol V, and today we'll analyze MasterCard Corporation stock. Before we go any further, I want to remind you that this video is not financial advice and for entertainment purposes only. MasterCard is a technology company in the global payments industry. The company facilitates the movement of money using its core payment network. In the annual report, there is a nice graph that depicts a typical electronic financial transaction and the role of MasterCard's core payment network. So when the consumer wants to electronically pay using a debit or credit card in return for the goods and services purchased, the following process happens. The issuer of your card, which is either your bank or the credit card company, have to transfer the agreed upon amount to the bank of the merchant. This is done by using the core payment network for MasterCard. MasterCard initiates the request, authenticates it, and then transfers the money for a fee, and this is how MasterCard generates its revenue. Now let's go over the analysis report. I created this report after reading the annual reports of MasterCard from 2017 to 2022, and I advise you to read the annual report before investing in any stock. MasterCard has one equity security, ticker symbol MS. They report their operations in a fiscal year that ends on December 31st of every year. And I always check the audit report that is listed in the annual report. The external accounting firm, which is PricewaterhouseCoopers, gave us the green light to trust the financial statements that we are actually using in this stock analysis. Now let's look at the 2022 revenue. MasterCard has two operating segments, and 65% of 2022 revenue was from the payment network segment and 35% from the value-added services and solutions. Geographically, 35% of 2022 revenue was made in the North American markets and 65% of the international markets. Now let's look at the growth of the revenue, operating expenses, and the net income. The revenue and net income are growing every year except for 2020 because of the lockdown. The interesting thing is that we can notice in this graph the huge distance between the revenue, which is in the blue line, and the operating expenses, which is in the orange line. In the past 2 years, the gross margin has been 55%, which is a great accomplishment and business model. Scrolling down to the free cash flow graph, generally, the free cash flow is increasing except for 2020, which we know why, and we don't blame them for that. And in 2022, the free cash flow went down by 3%, which isn't a lot, but is definitely something that we need to pay attention to. Now let's check MasterCard's debt. It's 36% of total assets, which is in the OK area, and it's not something we have to worry about, especially that they made 31 times the interest expense in 2022. So servicing their debt is not an issue at all. Moving on to the outstanding shares, MasterCard has been buying back some of its shares, and since 2017, they bought back about 11% of the outstanding shares, which is a great news for the remaining shareholders because their ownership percentage increases and all the measurements per share, like for example earnings per share and free cash flow per share, will also increase. A quick note about the outstanding shares is that MasterCard has another outstanding class of stock, which is Class B common stock, but it's not registered for trading in the stock market, and I considered it in the outstanding shares graph. Scrolling down to the dividend, MasterCard is a dividend company, and in 2022, the dividend per share was $1.96, but given that the stock price is over $400, the dividend yield is only 0.5% or 0.5%, which is very similar to Visa's dividend. So I'll make the same comment. This dividend is ridiculous, but at least there is a dividend. Now let's forecast 2023 numbers. Similar to Visa, we're using the total assets to revenue ratio. And usually I'm not on the optimistic side, but the 2023 Q2 report, which we can use to check the performance of the first half of 2023, we can see that the revenue is more than the first half of 2022. So I'm assuming the total assets to revenue ratio should be 61%, which is only 2% more than 2022. This will give us $23.6 billion in revenue and $10.6 billion in total free cash flow. Using the outstanding shares in the most recent report, the free cash flow per share is $11.28. Using 2.5% discount rate and 2.66% return on investment ratio, the intrinsic value almost matches the current stock price in the market. In other words, if you buy MasterCard today, then you are buying 2.66% investment, and with such a low return investment ratio, I will not consider this stock because 2.66% is very low and does not worth the risk. This makes me believe that this stock is overvalued. Generally, I will not buy a stock that has a return investment ratio less than 5% unless there is another crazy thing going on that would convince me to accept less than 5%. So if I want MasterCard stock to return at least 5% of my investment, then the stock price should be around $220, which means that the stock is overvalued by 88%. So since there are many other opportunities out there in the market, I will be patient and keep an eye on this stock until it goes down due to some bad news of the economy in general or news about the company itself. I'm thinking of making a video that compares Visa and MasterCard stocks to decide which one is a better investment. Let me know in the comment section below if you think I should make that video. And before you leave, I want you to know that I really appreciate it if you can subscribe and like this video. Thank you and see you in another video.